Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. The rally hits a wall. My, how quickly things can change. Investors were just celebrating fresh new highs in the stock market, driven in large part by technology stocks and more specifically, everything AI related like semiconductors. What goes up quickly can easily come down just as fast, however, and all it took was a more cautious tone from some of the large tech companies to cause some profit taking. The semiconductor index is now down 10% just in the past week. Several large tech companies have also been issuing new equity or have announced plans to do so, which dilutes existing shareholders. And all that in front of what will be the biggest IPO in history, SpaceX. Believe it or not, there's a limited amount of capital in the world, so there are signs of tightening liquidity everywhere. Stocks and bonds have struggled of late, and liquidity proxies like gold and Bitcoin have been under a lot of pressure in recent weeks. This is all coming amid sticky inflation, so the Fed is unlikely to be able to lower interest rates anytime soon to help provide more liquidity to the market. Best buckle up for a summer of volatility. For this week's featured insight, you don't have to follow the crowd. Some people feel like there's safety in numbers. And that can be true depending on the situation. When it comes to investing, however, you don't have to do what everyone else is doing. In fact, following the crowd is typically a good way to get yourself into trouble in the stock market. The recent move in AI-related stocks is a good example. Now, if you got in early, you could have made a lot of money. But if you got caught up in the hype just in the past few weeks, you may be feeling the pain right now. It's important to stick to a disciplined plan and stay diversified. It's okay to get exposure to new trends, but just don't get sucked into the emotion of it and don't chase the crowd. Also, don't put too many eggs in one basket. Looking ahead, first meeting for new Fed chair. Well, the new Federal Reserve Chair, Kevin Warsh, will have his first Federal Open Market Committee meeting as chairman this coming week, with the policy announcement at 2 p.m. on Wednesday the 17th. Most investors expect the Fed to keep their benchmark interest rate, the Fed funds rate, steady in the 3.5% to 3.75% range. Although Warsh would like to chart a path to lower interest rates, stubbornly high inflation, driven at least in part by higher oil prices due to the Iran conflict, is making that quite difficult, at least in the near term. This is a classic case now of being careful what you wish for. If the Fed does get a chance to lower rates this year, it might be because the economy is weakening. Not exactly something most investors are hoping for. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.